Hello and welcome to Find Your Freedom, a podcast dedicated to helping you truly find freedom in all aspects of life. Join your hosts and their expert guests as they share practical tips and strategies for finding more freedom in your life. It's time to take control of your life and create the future you want. Let's find your freedom. Here are your hosts, Lenny the Boss and Omid Rad Investor.
Boom, 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 boom. Check this out. We are back with another amazing episode of Find Your Freedom. And this episode is going to be killer. I'm telling you right now. But before we jump into what we got in store for you today, you know we have a free kit for you, absolutely free, easily downloadable. You can quickly go to www.findyourfreedom.com/freedom kit. Once again, www.findyourfreedom.com/freedom kit. All right. So we have a guy here that we had the opportunity to meet out in Maui, right? Doing some big things, man. And he belongs to Prime Corp Services, right? And they're about, entity structure, business credit, taxes, estate, all the stuff, that investors really, really, really don't want to deal with. We want to put these type of things in my guy Tommy hands, all right? And if you're self-employed or you plan to be self-employed, I'm telling you right now, this episode is the one for you. So we have a bunch of questions here for you, Tommy. So Tommy, I hope that you are ready. What's up, man?
I'm ready. I wish we were still in Maui, if I'm being honest, but thank you for having me.
Cool. So before we jump into it, if you could just give a little background on yourself, give a little background on the company, and then we can go from there.
Sure. Yeah. I'll take you all the way back to when I was 3 years old. If you really want to know, 3 years old, no joke. My parents get divorced. My mom was a real estate agent. My dad owned a real estate brokerage, and it's turned into a joke that I'm very grateful for, that the only thing they ever agreed on is that they wanted my sister and I to be self-employed. So for that, I fall back to everything happens for a reason, and I am eternally grateful that that was the one thing they had in common. Fast forward, 18 years old, first time being self-employed, I drove from Salt Lake City, Utah to North Carolina, knocked door to door selling pest control. And that was the start of my self-employed journey at 18 years old. I get back in 4 months. I did pretty well. In 4 months, I made like $40,000. And at 18, I thought I was the smartest human being in the world. Came home, told mom not to tell me anything ever again, you name it. But tax time rolled around, and I owed $10,000. And it was a rude awakening because Uncle Sam, that money's gone. I don't know what else to tell you. So we started Prime Corporate Services about 11 years ago. And initially the goal was to help startup entrepreneurs with, like you said, the topics that no one wants to deal with, the legal and the financial side of the business. Over the last 11 years, we've structured over 150,000 businesses. We file thousands of tax returns a year. We're currently getting over $4 million a month in business credit, corporate funding for our clients. We got about 200 employees. This has turned into something that I never really even expected, but it's been a really fun journey and got a lot of cool people in here. So it's been good.
Wow, 150,000 businesses and 200 employees. I mean, you guys. You've scaled pretty quickly, in the course of the time that you've kind of started this idea. I think for me, when I think about, I've never really was an entrepreneur before. I did the traditional W-2, and then I jumped into real estate, and I kind of had to work backwards. And I think a lot of investors end up doing that, where they kind of start learning about the tax piece or even the structure piece after they're already in it. So like, what is like some of the discussions you have for somebody who's brand new, and so you can set them up for success?
Yeah, it's a great question. I would say it's one of the most common questions that we get is, when should I structure my business and how should I structure my business? And with that being said, I'm a firm believer that everyone in the US should be self-employed to some extent, whether it's a side hustle, a side business, or full-time self-employment. And the reason for that is the tax code's over 70,000 pages. It's a joke. It's ridiculous, right? So a lot of those tax codes are meant to benefit investors and entrepreneurs. So even if you have the W-2 income, having a business and setting up a business to show the intent to generate income, even if no money's made, there's a lot of deductions that you can utilize to benefit as a business owner. So as soon as you listen to that first podcast, watch that first YouTube video, set it up like a business to show the intent and keep more money in your corner as a potential or future investor.
All right, that's great. And I love that, right? I love what you just said. You said, basically, regardless, you should be self-employed somewhat, right? So I sit back and I think, and obviously, where we met at a real estate event. Omid and I, obviously, we really got the same paths here. We did the corporate job thing, and now we're real estate investors. But is Prime Corp Services strictly for investors only, or is this thing open to anyone that's self-employed? You own a donut shop, a coffee shop, anything?
Yeah, great question. It's at this point, it is anyone that has 1099 income or strives to have 1099 self-employed income. And I mean, we're working now with Uber drivers and Lyft drivers, and it's turned into something that, once again, I never expected. However, when we first started Prime, we were working with a lot of people that were selling on eBay and then Amazon, and real estate investors started coming into the mix a couple of years in. And you could imagine, after 11 years, we have some businesses that are making tens of millions of dollars, but we've really tried to stick to our roots of what got us into this business initially. And we still want to help the person that's brand new, that has no idea what they're doing, doesn't know what questions to ask, and can give them a foundation that allows us to help them grow and scale throughout their journey with the legal and financial topics. So brand new to seasoned vet, I think there's something that we could help to better their business.
All right. So I know your business is kind of broken down into like a couple different like categories. I know that first one is really like the entity structure, LLCs. So maybe can you speak a little bit on that? Let's say like specifically around, let's say somebody like, when I first started and I started getting into real estate, how should I initiate that first structure when I'm, looking into, I guess, forming a structure or, assessing my options?
Yeah, I think one of the things that the three of us talked about when we were in Maui was you ask 10 attorneys and you get 15 different answers. Then you take that same question to 10 accountants and you get another 20 different answers. So you got 35 answers to try and juggle with, right? Here's legal and financial. My goal, I want to really simplify it. So the way that I've done that, and what I would recommend to everybody, whenever you're setting up a business, there's three things that you really want to take into consideration. Number one is privacy and protection. How much privacy do you want? And how can you protect your personal assets, your personal bank accounts, your retirement from your business, right? So number one is privacy and protection. Number two is tax benefits, profit or loss. Let's look at the good, the bad, the ugly, and decide how you're going to put yourself in the best position possible come tax time. Number three is credibility. Show yourself as a legitimate business, not only to your clientele, but to banks and lenders as well, right? So those are the three that I would recommend. When you're starting, we oftentimes recommend starting as an LLC. There are some additional tax benefits to S Corp elections, and we can really get into the weeds, but starting with an LLC gives you the protection, maximizes on the tax benefits, shows you as a business, and gives you flexibility as you grow and as you scale.
Okay, that's good. I really like that. So I'm going to recap that. So you said that when you're thinking of a business, there's 3 things you should think about. 1, privacy and protection. 2, tax benefits, profit and loss. And then 3, credibility. Right? I got that right?
You got it.
Perfect. All right, so let's walk through this, man. All right, so here's Lenny the boss, right? I'm trying to get some privacy and protection going on, and of course, taxes are our biggest expense, and I want to pay at least amount of taxes as possible, and definitely want some credibility, baby. I got a name like Lenny the boss, got to be credible. so with that being said, I just opened up an LLC. No, I didn't. Am I calling you first to open up my LLC, or should I just go open up my LLC and then come to you?
Yeah, I've got a biased opinion. Let's start with that because I think it's important for everyone to understand. You can set this up however you want, right? You could do it yourself. You could go to some online resource. You can hire an attorney, and there's pros and cons to all of them. I think the beauty of someone that works with us in the very beginning, how we've built our business model is if we can help people set up discounted entities where I love you guys, but I'm not paying for it for you. You got to pay the state, the filing fees, But you go hire an attorney, you're going to end up paying $1,000 to $2,000 on average.
Easy.
Right? And a lot of attorneys are only going to operate in the state that they're living in. And to your point with number 1 on privacy and protection, I'm sure we all know that not all states are created equal when it comes to corporate law. I'm not going to get political on you. That's not what we're here for. But Delaware, Nevada, Wyoming, New Mexico, Alaska, there's states that are more favorable to business owners than to consumers. So one of the things that we've utilized as a strategy for the last several years is setting up companies out of Wyoming so that the client has privacy. They have protection, right? I personally have a company set up out of Wyoming because if I get sued, I don't want them to see that Tommy Thornburgh's the owner and my personal address where my wife and my baby girls sleep, right? But the operational entities can tie together with that. So I think the beauty of working with us and having a clear blueprint on not only where you are right now, but where you're going to be in 1 year, 3 year, 5 year, 10 year is crucial as you grow and scale any business. So Wyoming's a great privacy state. It's inexpensive. We'll want to set something up that's operational in the state that you're doing business. But once again, that answer I just gave is complicated. Legal and financial is complicated, and everyone's situation is a little bit different. So I think that having someone you can talk to, working with us is a no-brainer. How's that for a biased opinion?
I'll take it.
I think, I like your thought process around it because you kind of explain the kind of in a it's very simple form, right? It's like the privacy and protection, the tax benefits, and the credibility piece, and then kind of assessing like where your threshold is in that spectrum of each sort of category, and then setting up some sort of strategy to determine how you want to implement that. So, I mean, to me, that sounds really good. Like, so I'm signing up. So we'll hop on a call after this, by the way. So
perfect. Let's do it.
Well, yeah. But I guess like transitioning. So I know you guys also do business credit development, and so that's another component. And I know a lot of times, even when I first started, I was just using my personal credit because I'm like, I can get $30,000 credit card, no problem. And then, depending on, I have to do research, and depending on business credit cards, there's restrictions or there's challenges, and maybe I'm not as versed and I don't have the research and so I can go to a professional. But could you walk me through that a little bit? Because I think for myself, I think that's a part where maybe when I first started, I had no clue.
I'm gonna start by saying you're not alone, and I'm gonna second by saying I am yet to meet an entrepreneur that says I wish I had less money. Yeah, I can't wait. I can't wait for the day. It's someone's gonna say it to me at some point, I'm sure. Couple things around business credit. It's been a really, really cool course that we've put together. We've done it from the very beginning. And here's kind of the visual that I'll lay out for everybody. In the US, everyone has a legal name, a social security number or an ITIN, and a personal FICO credit score, right?
Yep.
Our goal is we want to do the same thing for the business. Let's make sure you have a legitimate business name. Let's make sure you have an EIN, employer identification number. It's like the social security number for your business.
Okay.
But you can also build and develop a separate credit profile for your business that's called a PAYDEX score. It's PAYDEX. And they're very similar in the sense that they're numerical ranges, they're credit scores, but the PAYDEX score ranges from 1 to 100. Okay? 80 to 85 on that scale would be like you having a 750 to an 800. So what I tell people is building business credit is not rocket science. However, it is a process. And if you follow that process, it's not about where you are right now. In 6 months, a year, 6 years, 10 years, if you build up this separate credit profile, you will be grateful that you have the opportunity to utilize business credit, let the business pay for itself, and then pay yourself from there. Even if you don't know what you're going to use it for 6 years down the road, right? So having this separation legally and financially between your personal assets and your business assets is a no-brainer for long-term growth.
Boom, 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 boom. Man, all right. Let's stay with this business credit thing because, I think that the business credit thing is starting to become much more information is out there about it, and I'm seeing it a lot. Some just sound unbelievable. They even got memes out these days of saying, all you have to do is just sign this paper, you'll get $100 billion trillion. I guess walk us through this business credit thing and everything about it, because I know that, there's a lot of people who don't know too much about it, from the benefits of it, from it's not being, seen on your personal credit, right? How do you go about actually applying for it? And, I'm hearing these no doc loans. So I'm not sure if you can speak on any of that, but whatever information you can give to kind of give a clear definition of how this business credit thing's supposed to be used would be great.
If you have that paper for the $100 billion trillion, I will sign it right now.
I'm going to send you that meme next time I see it. It got to be the funniest thing in the world.
It takes time. It does not happen overnight. And you're absolutely right. There's a lot of things out there, and you have to be careful. It's one of the areas that our entire team knows we really try and under promise and over deliver, because we're talking about money. That's what it has to be, right? So let me just share a story with you. I'll share a story of a client that we worked with. Oh, it was probably about 6 or 7 years ago now. And they came to us and they had a really cool idea. They said, I want to take these big vans, like the big Sprinter vans, and I want to remodel them out to turn them into camping trailers, right? And I'm like, all right, sounds cool. I see what you're doing here. So we help him we set up his business entity. We help him build up some business credit. It takes 3 to 6 months to build up a good enough credit profile to the point where now he's able to go get a Mercedes Sprinter van. Mercedes loves 80 to 85 credit scores, by the way. I could tell you stories of what not to do with an 80 to 85 as well, but we'll stick with a positive story for now. So he gets this Sprinter van.
G-Wagon is what you're telling me?
You wouldn't be the first one to do something stupid like that we'll talk about that later. So then he goes and gets this Sprinter van, and then he goes and utilizes business credit for the entire build out, the entire remodel. He's got this thing tricked out. It's got wood panels. It looks clean. So before he's even done, someone offers him where he's gonna make about $20,000 on this first van. So he sells it, pays everything back, does it again, does it again, does it again. Next thing you know, he's on Shark Tank, signs a massive deal, and this is now a multi-million-dollar business that started from a really cool idea, business credit and corporate funding, and I would buy one, but I hate camping, so I can't support him, unfortunately.
That is freaking awesome. I mean, that is
It's cool.
Yeah, that's awesome. And I think there's not a lot of information, meaning I think people haven't really dug in about business credit enough. So if somebody is like doing a consultation with you, what are like maybe like 2 or 3 steps that they, besides, they set up their entity, they get their EIN. What's the next steps to beginning this like business credit journey?
Yeah, I think that if you schedule a call to speak with us, what I would highly, highly recommend is go into that call knowing that it's for you, right? I've got an awesome team over here, and they'll ask you a lot of the questions based off of, are you brand new? How many businesses do you have in place? And then also, what's your goal in 5 to 10 years? Think about that a little bit. Some people have no idea where they're going or what their end journey is. And that can be cloudy, and you can be in the weeds and just working hard. And there's a time for that hustler's mentality. But if you can have a blueprint of crawling before you walk and walking before you run, let's talk about the entity side and how you can protect yourself. Let's talk through what it's going to take to build business credit and corporate funding, but let's make sure to bring it home with how to save money from a tax standpoint. The largest expense entrepreneurs have in their life is taxes, right? So if we can game plan for that throughout the course of the year, it's not what you make, it's what you keep. Let's make sure you're strategizing throughout the year so you're not overpaying in taxes and getting to the wealthy mindset and getting to where your leisure is, where you can find your freedom sooner than it would take tax-wise.
Boom.
Oh.
Listen, I'm loving all this, man. So just to make it clear, I just got a couple questions I'm gonna throw out there, and if you can answer them, right? So when you start your business, you don't have to come to you at a certain point of revenue. Do a person need, should I be collecting $10,000 a month before I come to you, or do I have to do $100,000 a year, or is there any criteria there, that's required?
Yeah, great question. We'll meet you where you are. If you haven't generated any income, if you haven't done a deal yet, it's obvious that you're listening to this podcast because you have the intention to generate income. Schedule a call and talk to us. There's no tax code that says you have to be good at business. No one would be in business. Everyone's got struggles, I promise. But there is a tax code that says if you have the intent to generate income, you can take business-related deductions. So if you're brand new, talk to us. If you've already done multiple deals, if you're already doing millions of dollars a year, let us know so that you actually get value out of that call and we don't bore you half to death for an hour when we talk to you over the phone.
Oh, so now I want to touch on the tax prep just a little bit, because I know this kind of initiated. I mean, your journey started kind of with like the whole like, how can I save some money on taxes? And I'm thinking, okay, so we have the business, we're building credit, but let's say it's like Lenny and I. Lenny's in a different state, and I'm in in the state of California. People love paying taxes out here, so. So is it you'll essentially assign like a designate that's like state specific or like situation specific? Like how would that work? I guess like walk us through that a little bit, and the tax preparation component of it. Let's say I want one. Let's say I raise my hand and say, I'm ready for somebody. I'm transitioning.
California, they're charging you for the weather over there. I'm telling you. we have another winter in Utah like we did last year, I might be willing to pay it. I don't know.
Yeah.
So, yeah, so it's going to be situational. I mean, here's the thing and this is a common misconception of a lot of people that end up working with us or that have the intention to come and talk to us. They say, well, I heard you on the podcast talk about Wyoming. Does that mean that I get to avoid the state tax in California? Absolutely not. Absolutely not. The Wyoming play is for privacy and for protection. It checks box number 1. You live in California for 6 months and a day out of the year. You better believe California knows it, and they are going to want you to pay for that sunshine. So there's no magic wand that I can wave to get you to avoid paying state and federal taxes. But there is strategy that can be put in place throughout the course of the year because the IRS oftentimes works use it or lose it, right? The state income tax needs to be paid, but if you can purchase property that's going to lower and offset some of the taxable income, now you're keeping more of that money in your corner as opposed to just paying it in the form of taxes. So it is state specific. We'd be on here for another week if we went state by state, but you do have to pay taxes where you live. We want to play by the rules. The good news is that rule book is 70,000 pages. So there's quite a bit of room to work.
Yeah, I was reading it last night.
How bad?
Just kidding. I'm just kidding. But, staying with this tax, structure, and I guess use, like Omid said, use, us, like Omid over there in sunny California, and I'm over here in the 3-month period of sunny New Jersey, right? So, for how would you, if Omid and I was coming to you and saying, hey, this is what we got going on, right? How would you structure us?
Yeah, great question. The first thing I'd recommend is I'd say both of you should have Wyoming holding companies. And if both of you have Wyoming holding companies and each of you own those Wyoming holding companies 100%, now let's say that you do a deal. Give me a state. Where would you do a deal together?
Let's just say we meet in the middle.
Tennessee.
We're going to Knoxville. I see what we're doing here. I'll meet you on Broadway, boys. All right. So both of you have a Wyoming holding company with 100% ownership. And we decide that we're going to utilize Tennessee as a market that we are going to do business in. At that point, I'd say, okay, let's set up something out of Tennessee. Let's use a registered agent. Lucky for you, we've got registered agents in all 50 states. So you don't have to go find an address. You don't have to get creative yourself. However, Lenny, your Wyoming holding company is going to own 50% of this Tennessee company. Omid, your Wyoming holding company is going to own the other 50% of this Tennessee holding company and now go do business in Tennessee with that Tennessee entity because that's where you're generating income. Tennessee company gets sued. I don't see Lenny the boss and Omid the rat investor. I see the Wyoming holding company that's XYZ Holdings because on paper, you guys are super boring. In person, you guys are pretty fun, right? The goal is to build wealth and look as broke as possible on paper. That Wyoming will give you the privacy. The Tennessee gives you the ability to operate. And now we just need to make sure that we properly file from a state and a federal standpoint, which once again, we have all the accountants, we have all the CPAs, we can help with that whole process.
So just real quick, so on that Tennessee LLC, right? Because that's an LLC that would get created, correct?
Correct.
So who's owning the ownership? Maybe I'm just make sure I'm clear on that. Is that the ownership is coming from the holding company?
The Wyoming holding company, which also would be an LLC, would own the Tennessee entity.
Okay.
Now, because you own the Wyoming holding company, when the Tennessee properties are making money, you're going to pay yourselves out to the holding company and pay yourself from there. So now we have the privacy. It's clean. It's organized. I have every business that I own. I think right now I've got about 9 different businesses. Some of them I own 100%. Some of them are 50. Some of them are 20. Some of them are 10. All of them are owned by my Wyoming holding company. So that way, if any of them were to get sued, I have the privacy, I have the protection, but now I can pay myself out and then pay myself a salary or a distribution. So what's beautiful about starting with that holding company is whether you have one business or 100 businesses, you can crawl before you walk and you can grow and scale as you need, as opposed to spending a bunch of money or overcomplicating your situation in the very beginning.
So just a little clarification. So and every situation is different. So I have a S corp that's LLC that's out of California. Now I'm thinking out loud. Is there a way that I should somehow make it a Wyoming based versus a California based for the S corp, and the S corp essentially is kind of like this holding company / owns different entities.
Is this podcast for you guys or the listeners? It's a great question. And actually, I'm sure all the listeners have the same question. If you're already structured, let's do a review on that for what makes sense. I wouldn't recommend that you change what you already have, but I probably would say to you, Omid, that's probably a prime entity to build some business credit and corporate funding off of. Let's keep it in place. And the fact that you told me it's an LLC taxed as an S corp tells me you're making money. I'm happy to hear that, because now you pay yourself a salary or a distribution, and that allows you to avoid half your self-employment tax, which is Medicare and Social Security, saves you about 7% on the overall income, right? But moving forward, maybe we have the conversation around how to give yourself a little bit more privacy. How can you obtain a little bit more protect? Keep what you have, and moving forward, let's focus on the protection, the tax benefits, and the credibility piece to show yourself as a business. But let's exploit and let's utilize that entity you already have, especially if it means building more credit and lending it to your other entities down the road.
Man, that's great. That's great. So let's move along with a little more tax savings, right? When I met you, you were talking about, and I want you to explain it because I think I'm going to jack this up. I'm going to try my best. So when I met you, you were talking about how, you can put, your kids like on payroll or something, or gift them something. And you also mentioned, you're going to make sure your daughter have a 800 credit score by the time she's 11 and $1 million in her bank by the time she's 20. So I think just about everybody in life wants something special for their kids like that. So can you kind of go into like your thought process of that and explain how all of us can do something special and save us some taxes in addition to that?
The only chance I have to ever go viral is based off of what I'm going to do to benefit my kids. I can tell you that right now. It's I've got a 2.5-year-old daughter, and I've got another little girl on the way, and it's insane how. Thank you. Awesome. It's insane how much it's changed my why over the last 2-3 years. Every year there's tax code changes that come out. And for 2023, those tax code changes were called Inflation Act adjustments, which is insane, right? We know banks are closing. We know there's chaos going on everywhere. And these Inflation Act adjustments oftentimes benefit investors and entrepreneurs. So last year, the standard deduction was $12,950. For the inflation adjustment, they raised it $900. So this year it's $13,850. What that means is my daughter got a $900 raise, right? My daughter's a model, clearly, as you guys could imagine. Look at me. She looks like her mom, so thank God. I got her on my website, right? Models get paid money. Mine happens to make $13,849. She doesn't have to pay taxes on it. I get to write it off as a business owner. Okay. Now I get to put that money into an account, or I get to teach her how to invest, and we get to have some fun learning about finances. Why don't they teach this stuff in school? Why don't they talk about taxes? Why don't you know about interest when you graduate high school? These are the things that become generational that I've really, really become passionate about. And by the time she's 25, I think it's very doable to have $1 million in that account where she can purchase a home, she can invest into a business, she can go to college, she can do what she wants to do. If she doesn't make the good, proper choices with that money, we're going to have to come back for another episode on this podcast and we'll talk some trash. But I get the tax benefit. She gets to learn about finance. I can have her pay for her dance, for her swimming, for her different activities out of that account and help her understand how to balance a budget throughout the process, right? There's really cool things you can do. And then what I've also done is some cards require for your kid to be 8, 13. Every age is a little bit different. But I have my daughter co-signed on one of my Capital One credit cards that will impact her credit history. The two hardest things about credit, number one, don't miss a payment. We all know that one. That's going to hurt your credit. Number two isn't as common knowledge. How long have you had credit lines open?
Yep.
And you can't have an excellent credit rating unless you've had 25 years of credit history. So most people don't get that until they're 40 or 50 years old, right? My daughter's going to be 25 to 30 years old, and I think we could have an 800 credit score by the time she's 5 or 6.
That's cool.
So now if I'm getting the deduction as a business owner, my daughter's building up an account, she's simultaneously building credit. I'm using these as opportunities to help her understand how to balance her finances or invest money throughout the years. Every kid's different. One of them probably is going to really take to it. And the other one probably is going to give me the middle finger every time I try and talk about it. But we'll see. To be determined. But there's really, really cool things that you can do for those of you that have kids and still make tax-deductible expenses for your business.
I love that. I'm going to have to, look at kind of revisit if I have additional profits, how to kind of funnel those as an additional expense with my kids. So I kind of want to transition a little bit. Speaking of kids, estate planning. So I know we talked about the credit and the entity structures and the tax prep. So we're buying real estate, and should it be titled in my name, or should it be titled? Is it like what? I hear people talking about trust. So what is that? And are there benefits, and how should you leverage that?
California and New Jersey. If you guys don't have trust, you are out of your mind. Let's start right there.
Dun, 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 dun.
Oh wait, this was a podcast for listeners. So we have a full team of attorneys, and we do a lot of estate planning, trust, wills, living wills, power of attorneys. Anyone listening to this, I challenge you to look at and search how to avoid probate in the state that you live in. Most of you are going to see that a living trust is the easiest way to avoid probate. Now, if anyone has been through probate, or anyone knows someone that's been through probate, it's a nightmare. It takes forever. It's ridiculously expensive. If you can have these estate plan pieces in place, and what we do is all 4 components: trust, will, living will, power of attorney. They all speak to each other. My trust is the beneficial owner of my entities. So if something happens to me, it's going to roll up where my wife and my daughters know where to access my accounts, know how to get to my logins, don't have to go through this probate process, because I am working way too hard for the state to step in and take some of this money, especially with how much I care about those girls. So protecting yourself, building wealth, and building a legacy, I think, is part of finding your freedom, not only when you're just getting started, but if you're just getting started, these are things that you may not need. But if you own real estate, if you own your home, if you have assets that are worth protecting, having an estate plan is a great thing that really becomes generational long term.
So and thank you for bringing this up, because I think this is really cool. But I always hear all the pros and the pros and the pros and the pros. I never hear the cons. And there's a lot of people that do not have this set up. So what are the cons, man? Is the cons because this costs a fortune to set it up? Is the cons, like, what are the cons? It got to be some cons here on why so many people don't have, everything set up the way that it should be.
Yeah, there's always cons. How much time you got? So yes, it can be expensive. And I'll just give you an example. I've got an uncle that's an estate plan attorney in California, and he always is saying, Tommy, why aren't you sending me more business? I say, well, because, Unc, you charge $20,000 for an estate plan, my man. Come on, dude. He does a lot of the common conception out there is that estate planning is for rich people and wealthy people, right? And I think that that's one of the main things, is a mental block of thinking this is only for the rich. But the reality is if you own anything, which everyone does, there's ways that you can go online and get a trust and a will for a couple $100. We usually charge between $1,000 to $3,000, $4,000, $5,000, depending on the high end. But you can get very, very granular. You can get really, really into the weeds. I've got some people that want to donate all of their fortune to humane societies. I got some people that want to make sure their dog's in a hotel until they pass away. I got people that care about their kids, and you name it, I've seen it. But I think just the lack of understanding of what the benefit is from a protection standpoint holds a lot of people back. I think that's number one. Number two, our attorneys oftentimes recommend that people aren't running investments through their trust. And this is where you're going to ask 10 attorneys and get 15 different opinions, I promise. So weigh it out for what's best for you. But I don't want any of my money running through my trust, because if I make over $14,000, I'm taxed at the highest rate. So if the money isn't flowing properly, if it is listed as an owner as opposed to a beneficiary, then yeah, there's some tax consequences that can really turn into detriments to your business. And we want to avoid those at all costs. So how granular do you want to get? How many assets do you have? What are your goals and what are your dreams long-term? What are you trying to protect? Knowing your situation is half the battle in understanding how you can protect your assets.
All right, so I'm going to bring my own scenario in the mix, just because I seem to be doing that a lot. So I have a trust setup. So at work, when I used to work my corporate job, it was part of the insurance benefits, and I was able to kind of leverage that. Since then, I've kind of purchased a bunch of properties, but I didn't really consult in doing so. And so now I'm, can you modify a trust, or like, how does that even work? Or is it like more based on intent? Like, let's say I bought a property, but it's in the name of an entity or a name of my own personal name, but then it's not in the trust name or anything like that.
Yeah, great question. You can always go in and make changes. So you've got revocable and irrevocable trusts, right? Mm-hmm. Oftentimes they'll lock them up for those that have extreme generational wealth, where it's like, I don't want Lenny the boss coming in and taking all the money if something happens, right? So yeah, there's ways that you can structure that to do either or. I oftentimes recommend having it set up so you can go in and make those changes every year, every 3 to 5 years, every 10 years, every major life change, right? But oftentimes we don't necessarily need the trust to be the owner. We just need it to be a beneficial interest within the trust. So it's oftentimes very, very simple changes. And Lenny, your point on why don't people do this, or what are the cons? This is another thing that people think. Even I'll use myself. I'm still fairly young, right? I got plenty of gas left in the tank, I like to think. And people that are in that situation, just like all three of us, say, I'll do it later. I'll do it later. I'll wait until I retire, right? Sometimes that's a little bit too late, right? Sometimes it's too late. And having an estate plan in place and a relationship that you can go in and make those changes every 3 to 5 years. If we did that for you right now, Omid, you're going to be in a different situation in 5 years. So you better have access to that attorney to be able to go back and make those changes. And that's where I think we've done a really good job building out packages that allow you to go in and make those changes for a couple $100 as opposed to thousands of dollars every time you want to make adjustments. So big benefit there. I'm happy you brought that up.
No, that was great on me. That was, even though it was your situation, right? And Tony clearly told us we need to stop speaking.
This is for Omid. I don't know what you got.
Yeah. Our avatar is Omid, like that's our avatar, our listeners.
Oh, that's great. That's great. Hey, so just to be clear on that, because, you said just like, I think you said your cousin or your uncle or someone out in California charges, $20,000 or whatever. You're saying that I don't want to skip over this because there's a lot of people that truly want to set this up, but just do not have the money. Now, real quick, just take 1 minute. Can you just cover exactly what a person can do for those individuals that have limited funding?
Yeah, for sure. I mean, the first thing that I want to say is there'll be a link or something. I'm sure we'll get you a link and you guys can put it in the show notes or whatever for a free consultation, right? 45 minutes to an hour. Talk to one of our team members on where you are, regardless of what your financial picture looks like, because entity structuring is very inexpensive, right? Couple $100 depending on the state that you're in. And if a couple $100 is going to break the bank, then keep listening to podcasts and keep motivating yourself. But set yourself up as a business. It starts there. Get the intent to save money in taxes and legitimize yourself as a business. Then let's talk about how to build business credit. Then let's make sure that you're filing your taxes the right way. And then at some point, whether that's now, 5 years, 10 years, protect it in the form of having these estate plans in place. So you don't have to do all of these things at once. You can piece them together. You can do what you know is going to benefit you most. I know the goal is to generate wealth. I know the goal is to generate income and to find your freedom, to say it again. So you don't have to do all these things at one time. But if you keep kicking the can down the road, it's going to be that much longer until you get to your end destination. So do something, structure yourself as a business, track your expenses to maximize on your return, and piece it together as you choose. But our prices are very, very competitive. For an estate plan for $1,000 to $3,000, let's call it, and for unlimited changes moving forward, if you can find someone that beats that, please let me know, because I got to talk to them. So everything is very, very competitive.
Awesome. Yeah, I think that's super powerful. I think everything that you shared is very powerful, and it really gets you to kind of rethink, okay, I need to do probably a better job of planning, and I got to be a lot more organized, because I think a lot of times it's pieced together. I'm going to the accountant, and then I go to the attorney, and I like the fact that this is very holistic. This is like one-stop shop. You go and you kind of talk about your business, you talk about your vision, because I think that's super important. I think not a lot of people kind of think that far ahead. It just, hey, I want to start a business. And then, let's say real estate, they buy a piece of property. Oh, okay, maybe I should get some credit. How do I do that? Oh, okay, I'll just put on my own personal card. Not speaking from experience or anything, but and then you buy some properties and you realize, oh, I paid too much in taxes. Oh, okay, let me revisit my financial planning. But I think it's a lot more holistic, where a lot of times you talk to one professional and they say talk to another professional. So this is awesome. I feel like
I got to share with real quick. I want to share with you guys this is my favorite part of the career that I have chosen, Prime Corporate Services, and what it's been for me over the last 10, 11 years. This is my favorite part. We got a team of attorneys, and I've got a full team of accountants. My favorite thing in the world to do is take one question and ask our head attorney, and then go behind their back and ask our head CPA. And then put them against each other with how different their answers were, right? Because if the world was ran by attorneys, no one would leave their house. It's way too dangerous. But if the world was ran by CPAs, no one would talk to each other and nothing would get done or happen either. So we got this interesting dynamic of how do I protect myself, but how do I maximize from my deductions? So here's my disclaimer. I'm not a CPA. I'm not an attorney. I'm an investor. I'm an entrepreneur. And I get to play both of these gray area roads to find the middle ground to benefit investors and benefit entrepreneurs, but still make sure that you have the protection and maximize on the tax benefits and then let them do the work. So that's my favorite part is we have this umbrella that allows investors and entrepreneurs to understand the pros and cons, because to Lenny's point, there's always cons. And you're giving up something if you're getting something else. And the more that you understand what that something is, the easier it is to make decisions to benefit your future.
Well said. Well said. So, I love the part that you do the job of speaking to the attorney and the CPA and duke it out and then bring us the answer, the right one. So that's pretty cool. So Tommy, tell us, man, what does find your freedom mean to you?
It's a great question. I remember you asked me in Maui as well, and I don't remember my exact answer, so I probably need to get more clear on it myself if we're being honest. But if it is the same answer, it's because it's what I'm passionate about. That's my girls, my wife and my two girls. Memories and time has become something that means more than it ever has. I was always hustle, grind, make money. How do we build this business? And since my daughter, Newport Beach, California is a place that my entire family goes every single year on a family vacation. How do I purchase the properties that we've stayed in that we never thought that we would? And how do I create these memories that can become generational, where my girls' kids get to hear about the Newport house and get to hear about the vacations? And how does this turn from the now to the future of making it generational and impacting not only my girls, but their kids and their kids, and passing that down long term to be able to enjoy the time, the memories, and building wealth along the process is probably always going to be a motivator, I'm sure.
I love that answer. So that's a super cool answer. And I wrote.
Was it different than what I gave you in Maui? How similar? What did I tell you in Maui? I feel like it was better in Maui. I don't know what it was.
Well, it was much more the same topic, right? It definitely was about your girls, right? Which is great. But Maui, you killed it a little bit.
That's my bad. That's my bad.
I like the answer. I didn't hear the Maui answer, so that's the first time hearing the answer, and it sounds great to me. So
hey, I like being in. If we recorded this in Maui, this whole podcast would have been better. I was so much happier.
Yeah, right. Yeah, dude. Yeah, first, man. Yeah. So, I feel like we're gonna have you on again to maybe just dive into like a particular topic itself. But in the meantime, where can people find you?
So what we'll do is we'll get you over a link, but Prime Corporate Services, follow us on Instagram or Facebook. We try and do tax tips of the week to keep you thinking, because you're going to listen to this podcast and you're not going to think about it unless you schedule a call. So give us a follow. We'll put tax codes out there that'll benefit you throughout the course of the year. But primecorporateservices.com, maybe we'll do like a / Find Your Freedom or FYF. We'll put something together for you so that you can schedule a call as a listener, get that free 45-minute to hour consultation, and have a better idea moving forward of the blueprint on the legal and the financial side of your business.
That's beautiful. That's beautiful. So we're coming to the end of our show. And at the end of our show, what we like to do is we like to do this big boom session, right? So how it's going to go down is I'm going to count to 3, 1, 2, 3. And right after that, in a uniform manner, all three of us will say boom as loud as we can. All right. Let me know, fellas. Y'all ready? I'm going to take, for those who's not watching, I'm taking a drink of water right now. All right. So let me know if y'all guys ready.
Let's do this.
Let's go.
All right. 1, 2, 3. Awesome. Check this out. We just had an amazing episode with my guy, Tommy from Prime Corporate Services. And these are one of the episodes that you really just sit down, you grab a cup of coffee, you grab a cup of tea, a pen and a pad, and you use your thumb to pause some things, write some things down, take a listen into it, take a listen to the episode, listen to it 2, 3, or 4 times, and then at the end, you make sure you schedule that call with Prime, because it's going to absolutely change your life. Not just your life, but they have strategies to change your kids' life before their life really start. And that means everything to all of us as parents. All right. So make sure you get in contact with Prime. So with that being said, we have a absolutely free journey kit for you. All right. Easily downloadable. All you have to do is go to www.findyourfreedom.com/freedom kit. Once again, www.findyourfreedom.com/freedom kit, and share this episode with everyone you can. We need you to listen to the episode and give us a 5-star review, because this is the way that we're able to bring Tommy and also like-minded people that can just absolutely help you and help you change your life. So please take a listen, give us a 5-star review, send this to all your friends, all your coworkers, the ones you like, the ones you don't like. And until the next episode of Find Your Freedom, we talk to you soon. Peace.
Peace.
Thanks for listening to Find Your Freedom. Be sure to subscribe wherever you listen to podcasts. While you're at it, please help us spread the word by leaving a rating and review and sharing the podcast with friends, family, and colleagues. Until next time, get out there and find your freedom.